Chart Talk, talking today with Dan Haugh from PTI Dan, let's talk about index because I know your firm follows that very closely. What's been driving things this week and particularly yesterday?
The negative news yesterday out of Europe certainly set a little bit of the tone, but on the other hand, we've been down for 3 or 4 days and we opened up on pretty upbeat earnings.
Now, the Dow broke the 200-day moving average yesterday. The S&P 500 did it earlier in the week. A lot of people say that's the signal at the end of the bull market. How do you read that?
There's a couple different definitions of bull market. I mean, certainly the 200-day moving average is some people's, a 10% correction or other people's. So, I mean, I don't know if I put that much stock in the 200-day moving average because really our market is being led by the Russell index, and they broke the 200-day moving average weeks ago. So, Russell's actually performing a little bit stronger than the other two the last 2 days. So that's the one bright spot in the market right now.
ETFs, what do you see there?
We do a lot with the Spider. We do a lot with the Russell. We also do some with the sector Spiders. They all look very weak at this point. They certainly are selling off pretty good. The worst is the XLE, the energy sector, because the news yesterday about the consumption of oil was awful. I mean, it basically said it was the slowest growth rate since 2009, our biggest recession year. So that really set the tone for oil, drove it down another 4%, yesterday afternoon. So consequently, those were recession-type numbers.
So you're staying pretty much on a soft cushion right now, not doing any big moves?
We're very, very defensive. We let a lot of our stock get called out in June and July. We've been in cash ever since. We're just doing small option spreads to give people a little downside push in case something happened. This was our first target in the S&P yesterday, the 1865. So probably tomorrow we're going to look at the news and see if the earnings are continued good. We might start stuffing our toe back in the water. But I think it might be a little bit early because this really is not looking good right here.
All right, Dan Haugh, thanks so much.
Thank you.